Good morning, this is CurrencyChange, a morning report on the 16th of August. Some information on the USA. So the jobless claims in the USA declined to the lowest level since 2007. Employers fired the fewest workers last week since before the recession began almost 6 years ago, raising expectations that the bigger the job gains will give USA consumers the ability to boost spending. The number of claims for jobless benefits dropped by 15,000 to 320,000 in the week ending August the 10th. This is the least since October 2007, according to the Labour Department's data today in Washington. Other figures showed consumer confidence hovered a new 5-year high last week. Builder sentiment jumped this month to the highest level since 2005, and manufacturing is struggling to gain traction following the slowdown earlier this year. So stocks and government securities tumbled as a sign of an improving economy and stabilisation. That's hard to earn it. In inflation fueled by speculation, the Federal Reserve will curb bond purchases this year. A slowdown in firings may be the persecutor to pick up in their hiring that would bolster household incomes, and the spending accounts for the 70% of the economy. So some information about the employment gains. An improving job market may also signal to federal officials that the economy needs less stimulus. Payrolls expanded by 162,000 workers in July compared to 188,000 in the prior month. The jobless rates dropped to more than a 4-year low to 7.4% in July from 7.6% in June. So initial jobless claims reflect weekly firings and typically warn job growth can accelerate. As an improving economy encourages companies to hold on to their employees, job candidates could benefit from a growing number of available positions. On to Europe. So the Eurozone's debt crisis is far from over and could pose a risk to the region's recovery, according to the analysts, despite its economy returning to growth for the first time since 2011. The official GDP data for the second quarter revealed that the Eurozone has emerged from the longest recession in continental Europe in over 40 years. The economy grew by 0.3% on quarter one, as opposed to 0.2% last quarter. Countries on the economy's papyri, Portugal, Ireland, Italy, Greece and Spain, have been hit hard by the Eurozone's debt crisis. Efforts to cover their budget's deficits led to tough austerity regimes, which have in turn growth prospects. Unemployment in the Eurozone remains stuck at its record high of 12.1% in June. Official figures showed the end of last month. And then on to the UK. So Morgan Stanley sees the pound at 148 on Carney's rate clarifications. Morgan Stanley says the pound will weaken 5% and 1.4 rate in 3 months. On the best Bank of England Governor Mark Carney will stress he'll keep the interest rates low, as even a data sign it was strengthening. The pounds advanced to an 8-week high yesterday after retail sales in July rose more than economists forecast, providing the opportunity to sell currency. Strategists led by London-based Hans Brucker said the central bank is more open to additional stimulus than the market prices suggest and may resume asset purchase that tend to weaken the pound, they said. The pound rose 0.5% to 55.71 at 5 p.m. London time yesterday and appreciating to 155.94, the strongest level since June the 19th. British retail sales rose to the fastest annual rate in over 2 years in July as a heatwave boosted the sales of barbecue food and outdoor items. This is shown by official data. Thank you very much.